I have been getting questions about whether I will sell or trim my position in Reysaş because when I released my first video on the company, it was trading at around $300 million range and I obviously had bought shares before that. I believe my initial buys were at $100 million range, but since then I have bought at all levels and now Reysaş Logistics is trading at around $1.1 billion, which is almost a quadruple of my first video and 11 times more than my initial investments. Before we continue, I want to disclose that I have equity in the companies mentioned in this video. This video is for educational and entertainment purposes only and should not be considered as financial advice. When I first covered the REIT of Reysaş, which owns the real estate, it was trading at around $280 million, and today it is at around $900 million range. Reysaş Logistics owns 62% of the REIT, so the ownership of the real estate is coming from that equity. Also, last month I actually have sold half of my position in the logistics and bought the REIT stock. I have sold the logistics shares at 18.64 liras per share and bought the REIT shares at around 13.60 liras per share. It's been less than a month since that trade and so far it has gone okay, but we will see where it goes. Now, going back to the original question, will I close my positions after such gains in such a short time? The short answer is no. So if you just wanted to hear my answer, no, I will not be selling or trimming my shares. Long answer is also no, but let me explain what I plan to do. By the way, I currently have around 75% of my portfolio in these two companies. When Monish Babrai first invested in Reysaş, I didn't know almost anything about the company. But his thesis was that the liquidation value is far greater than the market cap, which was at $20 million range when he first bought it, and yes, it is a 55 bagger for him so far. The thesis was that the company could liquidate its assets for around $1 billion, and after paying $200 million in debt, the liquidation value would be around $800 million, and with a market cap of $20 million, it was definitely a no-brainer to invest. But that was in 2019. Today, the company is worth so much more than that, most likely around 2 to 3 times more in my opinion. But feel free to do your own research. This is just my guess. But the market cap has grown significantly as well, so the difference is not what it used to be. However, Reysaş is not a cigar butt. It is far from it. It is actually a compounding machine that's still trading at a mere cigar butt. Since Monish's investment, the company added solar business, many new real estates, and they have grown significantly in the logistics side as well. I think the main reason why more people didn't clone him is the fact that the company is trading in Turkey. And it literally sounds too good to be true. When you get offered a situation to buy $1 for only 3 cents, I kind of understand why more people didn't believe that it could actually be true. But here we are. 75% in one company is indeed a very aggressive approach, but I have studied everything about the business and I am very confident that it has the potential to significantly outperform the main indices, at least for the foreseeable future. And I am still buying the company regularly. Now that the company is at $1 billion range, the investors who heard about the company but have not invested or studied it say that it is a 55 bagger for Monish and it is around a 10 bagger for most of the cloners. Time to sell when it is high. That approach is very wrong. In fact, Monish's friend, who also bought the stock with him and sold it after the company has doubled, missed out on a more than 20x gain so far. And every 100 bagger at one point is a 10, 20, 50, 75 bagger. To sell a company just because you have made a certain amount of times of your initial investment has never made sense to me, and it still doesn't. What I am doing and planning to keep doing is to keep a close eye on the companies, what they are doing, and to look at the valuation of the company every year, compared to the market cap. And I will only think about trimming or even selling under 2 conditions. First, the market cap gets outrageously overpriced that the only logical thing would be to sell. But here's the thing. When I say 800 million, 2 billion, or whatever number you see fit as the liquidation value, it is the liquidation value, not the intrinsic value. If you have a company that doesn't pay any dividends and puts its money to use at 20-30% returns, what would be the intrinsic value for that business? When asked about the perfect business, Warren Buffett said the ideal business is one that earns very high return on capital and that keeps using lots of capital at those high returns. That becomes a compounding machine. This perfectly describes Reysaş so far. By the way, if you are interested in learning more about businesses like this or following my portfolio updates, consider supporting me on Patreon, where I share exclusive insights and research. The link is in the description. So, why on earth would I sell my position even if the market cap is double or triple the liquidation value? If I am an investor for the long term, over the long run, with such great returns, the real value of the business will be far exceeding the market cap. Imagine buying Berkshire in 1985. The stock was trading at $2,000 per share. You could have paid $20,000 per share for Berkshire and still outperform the S&P 500. I am not saying it would be smart to do, because back then Berkshire wasn't worth $20,000 per share. And I am not also saying that Reysaş will definitely perform like Berkshire. But what I am saying is if you have a long time horizon and a great company that has high returns on capital employed, this is a very forgiving combination in terms of valuations that you pay for the company. The second possible reason for me to close or trim my position would be either a direct change in management, which is almost impossible since they also own enough shares, and just like Zuckerberg does in Meta, some of the shares that they own choose board seats directly. So thank God, this first case is almost impossible. But the last possible reason for me would be a decrease in performance. I have been following the company for years. Other than some delays, I have actually almost seen no significant mistakes so far. I am obviously not going to be selling at the first or the second mistake that I see. But if enough of them happen over a 5-year period, I will probably be looking for better alternatives to put my capital in. But so far, from what I have seen, this looks almost impossible. To sum up, Reysaş has been a phenomenal journey for me as an investor. While the gains so far have been incredible, this is a business I believe still has significant room to grow. My plan is to keep a long-term perspective, stay vigilant about management and performance, and continue riding this compounding machine for as long as it delivers exceptional returns. It also helps knowing that the CEO said they expect 100% growth in revenue from both companies in 2025. If you enjoyed this video about Reysaş and want more in-depth analysis of Reysaş and other companies such as CCI, Hava Airports, and Anadolu Efes, you can find all of that in my Patreon. I share exclusive updates and insights with my supporters there. Thank you for watching, and I'll see you in the next one. Bye.